the three things that I think people should have are fiat, a little bit of fiat because they need to pay for their day-to-day expenses. They live in the real world. Then the majority of the rest of it should be in Bitcoin, at least in my opinion. And then you can maybe, if you want to, you could put 5-10% into MicroStrategy. You can put your pension account into MicroStrategy. That's what I personally did. I put my pension account into MicroStrategy because I had the choice between buying either the ETFs or MicroStrategy. So I don't think Bitcoin is going to zero. So the way that I see it, because MicroStrategy is custodying their Bitcoin with Coinbase and so are the ETFs, the risk is the same in my opinion,
You're
right?
getting more leverage though.
More leverage, right,
So
right. It's possible that you could go to zero. It's possible that MicroStrategy could blow
yeah.
up, but I don't think that's going to happen just based on how they structured their debt. I think every 4 or 5 years, Bitcoin's price is going to go up. So in
Mm.
4 or 5 years, whenever their debt comes due, the Bitcoin they have will have gone up in value. So worst case, they can sell some of their Bitcoin. They can borrow some dollars against their Bitcoin. They can do whatever they want to. They're going to be much more lenders by that point, and they can pay off that debt, and they can just keep rolling it over forever. So
Mm.
the way that I see it, have fiat, have Bitcoin, and a very small amount of MicroStrategy.
Hello and welcome back to Bitcoin for Professionals. Today we have a special guest, Rajat Soni. How are you doing, Rajat?
I'm doing well, Ralph. Thank you so much for having me.
Well, it's a pleasure to have you. I'm a big fan of your work on X. I know things can get heated, but I love everything you're doing, to be honest. But let's jump straight into it. Rajat, we typically like to get to know our guests a little bit. You know, a lot of people talk about Bitcoin, but we want to know what you did in your pre-Bitcoin life.
So I worked as a finance professional. I worked as a fixed income analyst. I have my CFA, Chartered Financial Analyst designation. I worked in finance for I think it was eight years or so, almost 10 years. And after I left my job in finance, I started posting social media content, personal finance content, finance, stocks, real estate, just how to get to financial freedom at some point in your life, just for the average person. And in 2023, I discovered Bitcoin and I went all in.
That's amazing. So you come from a very conservative field in finance. So I'm assuming you saw the world very differently. I'm curious, when you found Bitcoin, was there something specific about it that kind of caught your attention? Because coming from fixed income is, really far and jumping into a technological thing. But I'm curious to see how that transition happened.
Yeah, for sure. So I think I said before that I discovered Bitcoin in 2023. No, I discovered it early, but I really only started caring about it in 2021. I would say that I got orange pilled in 2023. That's what I should have said before. But
Hmm.
besides the point, I think the one thing that really got me to change my perspective on the traditional financial system is that I noticed that most of the things that we did in the financial system are they're meant to fight inflation. And inflation in the first place is something that's created by the financial industry in a way where they lend as much money as they can, they create more money and they add it to the economy. That's what's leading to inflation. The cost of living is rising because of that, because more and more money is chasing a finite number of goods or a slowly increasing number of goods. So the amount of dollars in the system is increasing much, much faster than the pace of everything else increasing. So the financial industry is basically designed to create inflation and then be the solution for it. So I was part of the solution in fixed income. So what we were trying to do is we were working with pension funds, we were working with insurance companies who have payouts in the future, and whenever they would have a claim, let's say these companies are 50 years old. They've had an account with TD for 30 years, the bank that I was working with. So what we would do is as they get claims, they have this massive amount of cash. Over that 30 years, they accumulated a certain amount of cash they put into their portfolio. And whenever they had claims, they would sell some of their bonds to get cash so that they could pay their claims out. And I mean, they were making it was kind of weird to me that they were making maybe 2-3% on their portfolio, and then their fee was probably 0.5%. So they weren't even really theoretically they were beating inflation if you go based on what the government tells us in the public numbers. Theoretically, they were beating inflation, but in reality, I don't think they were because
Mm.
they're actually they kind of screw the clients over as well with insurance. They give you an amount of money based on what like 30 years ago, whatever your payout should have been 30 years ago. So if you sign up for insurance today for $1 million policy, you're going to get $1 million in 20, 25, 30 years, your beneficiaries. And by then, what's it worth? So to them, all that matters is making sure that they have the money whenever they need it. And then that interest is basically like a bonus on top. The thing that really got me is that real estate is used for the same thing. So real estate is used by investors, by wealthy people to protect themselves against inflation. So real estate is considered an inflation hedge. It's considered a way to protect yourself from the rising cost of living in general. But who's the one that's hurt by that? The person that's hurt by that is your tenant. The tenant is working an actual job, while the landlord very likely borrowed money to buy the house. So they borrowed fake money to buy a real house, and then they rent it out to a real person who has to work a real job. So the base the root cause of this is that fake money. So one group of people being able to get fake money while the other group of people can't. And that's what kind
Mm.
of creates this whole I think that's what creates this whole the wealth gap that we have today, with wealthy people being able to borrow whatever they want to buy whatever they want, while the poor can't do that. So if you don't have a house, then what are you going to borrow money against? Your bank's not going to lend you money. They're not going to give you money that's unsecured. They're not going to give you, like, if you borrow money on a credit card, you're going to have to pay 20% interest. While people who have a house, they can use it as collateral. They can borrow money at 2, 3, 5, 10%, right? At least half the interest rate. And in the worst case, it's maybe a, a tenth of the interest rate. So I think that's what creates that wealth gap. But when I discovered Bitcoin, it, that was something that was bothering me a lot, and the fact that wealthy people can buy houses. And when I discovered Bitcoin, and this is something that I saw in a socialist video. So a socialist guy was talking about how landlords add no value. We don't agree with, capitalists don't agree with socialists on a lot of things, but I think base the base the base reason for both people fighting for what they want is that they want a better life. They want prosperity. And
Mm.
because of real estate being used as a savings tool, that's not happening. Capitalists, instead of complaining about it, capitalists are just buying the houses. Socialists are complaining about it and nothing is happening. But then they both want the same thing. At the end of the day, even somebody who's a capitalist, they want prices to drop. Socialists want prices to drop. So we agree on a lot of things that I don't think most people see. Most people would say that they agree with. But that video that I was talking about, the socialist video, he was talking about how landlords don't really create any value. They don't add any value. They just extract value from the system. And I find that completely true. I think that's what really got me to go deeper into Bitcoin. That's the aspect of it that really made me change my opinion on fixed income, on stocks, on real estate. And I think that's why I focus so much on real estate
Mm. I
in a lot
noticed
of my
that.
content.
Yeah, you trash quite a bit real estate, and I kind of get it. I mean, what you're describing really is the Cantillon effect, which is the
Yes.
widening wealth gap, which is, if you're rich, you have assets, you can use those assets to borrow more money at a much lower interest rate, which makes you more rich because then you take that money and then you buy more assets. And the
Yes.
poor, or even nowadays middle income earners, have barely any assets. So the middle income threshold keeps going down and down, and we're going to have very two distinct social classes: the rich, the haves, and the have-nots in terms of assets. One thing you said that I found very interesting, because I come from TradFi as well. So funny, I also worked at TD Asset Management and then CIBC Asset Management. And you're surrounded by, people talking about asset allocation and how we're gonna shift the portfolio and all that. But what you just said is really sums it all up, which is they're trying to beat inflation, and they're trying to find the jigsaw puzzle pieces to put together to outperform inflation. But the reality is similar to how the pharmaceutical industry, they create the problem and then they sell you the medicine for the problem. Uh, Finance, TradFi does kind of the similar thing, right? So they print money and then you go to financial experts to try to outperform the money supply expansion. But that's really interesting. And real estate, like you said, so I'm Lebanese. real estate's a big deal, similar to gold in our culture and in the GCC in general, and in India, in a lot of countries in the world, gold is precious and so is real estate. But what a lot of people, and you talk a lot about this, and I want to kind of break it down for our audience. So, what are the major problems of real estate as, protecting your purchasing power? Because a lot of people are like, just buy a property with any excess cash you have. But they're not factoring in a lot of stuff. And I see you getting into these heated debates on X. Maybe you can talk a little bit about that.
Yeah, for sure. Um, I'm so that's such a great question because I'm fully prepared for it. I didn't know that you were going to ask that question, but can I share my screen here? I just want to show you a spreadsheet where I have all the differences, I guess.
Yeah, we can try to do
Let me see,
that. Can
let me see if it works here. Give me a second.
Yeah,
Does that work?
yeah, I see it. Oh
Yeah.
wow, already prepared.
Oh,
It's like
there
you
you
read
go.
my mind.
This is something that I've actually been making videos on this for a very long time. So if your audience goes to my channel, just search for my name, search for real estate, you'll find I talk about real estate all the time, about how risky real estate really is. So let's go into it. Most people probably think I'm a crackhead for saying, oh, real estate's risky. No, real estate goes up all the time. Okay, it does, but there are risks associated with it. If you get in at the wrong time, if you make the wrong decisions, if your tenants are the wrong people, then you're done. Nothing you
Mm,
can do about it. So let's take a look. So first of all, you have to get a loan. You have to borrow 80, 90% of the value of the house. You have to pay that back over time. That's based on your income. If you don't have your income, we have income here. If you don't have the income, then you can't pay it back. You lose everything. Then you have to pay property taxes forever. There's no period in time where you don't have to pay property taxes. If your government can take property taxes from you, they will. Next one, legal disputes. If something happens on your property, if you rent it out to someone and let's say they get hurt on your property, or let's say your property collapses and it falls on them and something happens to them, they become a paraplegic, you have to deal with that. Legal disputes. So next one, maintenance and repairs. Real estate is a real estate is an asset that depreciates over time, so you have to pay for maintenance, you have to pay for repairs, you have to make the outside of it better over time. People may not want to rent it if it looks too old. You have to do all that stuff. So another reason not to own real estate, I guess. Or another reason why real estate is a liability, I guess, in a way. Next one, you need a high yield savings account. So you have to have capital on the side just in case something happens. Let's say the roof needs to be repaired, the walls need to be repaired. Something happens, you need to do renovations. You have to have capital on the side. Dishwasher breaks down.
mm,
This is for rental properties. This is not for your own property. For your own property, it's going to be even worse. Or actually, for rental properties, it's going to be worse. For your own property, it's going to be a little better because you're probably going to take care of the things that you buy. Your tenants aren't. They're not going to care. Next one, cash flow. You have to generate a positive cash flow in order to hold real estate. If you can't generate a positive cash flow, you're just relying on the speculative value of the real estate. And I see a
mm.
lot of people who are doing this. They're paying 150, 200, 300, $500 in negative cash flow into their property. I've seen people who have negative $2,000 every single month
Wow.
in cash flow, negative $2,000. So you have to have a positive cash flow in the first place to make real estate work for you. But if you're speculating, if you're gambling on the value of the real estate going up, then of course that's fine if you have a negative cash flow. But in reality, that's a lot riskier than you think. Next one, earnings.
Mm.
Um, you need to change the amounts that you earn every single month to or every single year to account for inflation. If you don't, then you're kind of screwed. And then on top of that, your government is going to limit you from how much you can increase the rental payments on your house each or on your property each year. In Ontario, I think it's like 2% or 1.5% or something like that. So if inflation is 10%, your tenant is getting a 2% increase. You take the hit. Why
Mm.
would you want to take? Why would you intentionally choose to take the hit? That makes no sense to me. So the next one's okay. We'll talk about the risks. What if your tenants turn out to be fine in the beginning, and then they just destroy the property over time? You never know when somebody's gonna just snap. They
Or
start
they
punching
just
walls.
stop paying you. I've had a
Exactly.
friend, he spent a year in legal disputes trying to kick the tenant out. But the
Yes.
problem is the regulation is on the side of the tenant. They don't want more homeless people, so they make it near impossible to kick them out.
Yeah. Exactly. Okay. And then the next one, income. What if your tenants lose their income? What if you lose your income? What if you have negative cash flow? You don't have the income. You lose your job. What's gonna happen? You lose your primary residence and you lose your rental properties. Is that
Mm,
worth it? Probably not. Next one, vacancies. you can't guarantee that there's going to be people who are living in your place all the time. It doesn't matter where you live. I don't care what you think. There's no guarantee. Your price might be too high. The market price might come down. What if uh, uh what if something gets built next to you, a condo gets built next to you, or a power plant gets built next to you and people don't want to live there anymore? I don't know what could happen. There's a lot of reasons for there to be vacancies. Market fluctuations. People think that real estate is great because of the cash flow, but if you're getting negative cash flow, then of course you're not really getting benefits. But then if you need to sell the property for whatever reason, let's say you're leaving the country, what if the property value is lower than you expected it to be? Are you going to wait? You're going to stay in the country for another 2-3 years until the market recovers? Probably not. I don't think that makes any sense. This is one that actually impacted Bitcoin as well. This is one of the only ones, market fluctuations. Then you have a job. So if your tenants lose their job, actually job and income are very similar, but you have to have a job in order to get a mortgage. Most banks probably won't lend to you if you can't get a mortgage unless it's very special situations. With a job, you'll probably get a lower interest rate. So you have to be you're basically stuck to your job. If you lose your job, that could be another risk. Property damage, I talked about that with maintenance. If your tenant just snaps, destroys your property. Negative cash flow, I talked about that here. Then you have squatters, people just taking your property and living there for however long they want to, and you not being able to do anything. Then we have liability claims. So liability claims is very similar to legal disputes. Natural disasters, you can't control that. Nothing you can stop for that. What if there's a tornado in your area? I think one thing that I didn't add on this, actually I should add it now. War. How are you gonna protect your property in case of a war? You can't. Then there's devaluation. So that's the same as maintenance. Over time, your property is going to wear and tear. So why would you want to hold a property if you don't have to? Then the last one, location. Your location is going to be great when you get it. Maybe you made the right decision, but over time it could change. Your area could get worse. There's no guarantee that it'll get better. So all of these are risks when you're buying real estate. If you buy real estate, you're taking all these risks. And it's up to you to figure out whether this is worth it. The only ones of these, like I said, the only risk of these that Bitcoin has is market fluctuations. Other than that, everything is specific to real estate. If you have these issues, I mean, you could if you have any of these problems, then you could easily go bankrupt.
Yeah, 100%. And not to factor in that people always overestimate how much they get to keep at the end if they were to sell
Yes,
their property. And that is mind boggling for me. They're like, oh, wow, they forget capital gains tax. They forget all the money that they've spent on keeping the property up to good standing, all the problems they've had to
interest.
deal with. Interest, yes, exactly. So they think, wow, look how much money I made, but they're not looking at the net after all the expenses because people most of the time don't track how much they've spent on the property over
Yeah.
long periods of time. And that's problematic, right? So you think your return is high, but your return after you factor all of that in, and then the huge capital gains tax that you have to pay, sometimes you have to wonder, is it worth it? And you might just be lucky. I know people who rode 10, 15 years of the real estate bubble in Canada, and Canada didn't see a correction like they did in the US, so they kept riding that wave, selling property, buying another one, selling it after 2, 3 years. But that's just irrational. That's unsustainable. And I think a lot of people woke up when interest rates spiked, and I don't think we can sustain this. But based on what happened over the last few years to combat inflation, uh, I'm surprised between you and me that we haven't seen a bigger correction. The market slowed down, but we haven't seen a bigger correction, more delinquencies, etc. Is it because the banks are trying to support the market by not letting it fail? I'm curious to get your thoughts. You were in this industry, you understand this. Maybe you can share some of that.
To be honest, I don't know. I think it's just
Okay.
people doing whatever they can. I think from what I've seen, personal debts have increased. So
Mm.
maybe people are borrowing money on their credit cards to pay the difference, and they're just holding on as long as they can, right? I don't know. Maybe
Yeah.
that's purely speculative, though. I don't know.
Mm.
Um, but I think
I
it's one.
know home equity lines have gone up. Like people are using
Right.
their house to take more debt, like a checking account, which
Yep.
these are at record numbers. Credit cards are at record number. It seems like something is gonna blow up. It's just not
Yes.
happening.
Yeah.
That's
I
that's
mean,
crazy.
who knows? Maybe it won't. right?
Yeah.
Who knows?
I mean,
Maybe it'll never blow up the way that we think it will. But over time, the only thing that I know is that, like, the only thing that's pretty much not guaranteed, but it's as close to guaranteed as anything gets, is that the price of real estate is going to decrease in terms of Bitcoin. That's all we know.
and that's happening. You can look back any time period. You don't even have to go extreme when Bitcoin had almost no price, just 5 years, which is the standard, record that investment consultant look at for a fund or any type of investment. And Bitcoin's blowing it out of the water. It's doing it for every other asset. So you're saying basically, why waste your time dealing with all of these headaches, all of these risks that are beyond your control, and then just deal with one of those, which is the market fluctuation, which is a common theme across any asset class.
Yeah,
It's not like
exactly.
it's not specific to Bitcoin. Yeah, I love that, and good on you. And it's surprising because I started my journey with the CFA exams. I just got the level one, but then I got so knee deep into Bitcoin. I'm like, yeah, I'm not going to do this. Whatever they're teaching me here, at that point, I'm like, why am I studying something I don't really believe in? So I'm like,
Yeah,
I'm not going to waste 600, 700 hours of studying. Curious, when did you get your CFA charter? Was it before Bitcoin?
it was before. It was in 2019, but I'm actually happy that I got it because I think it gives me a different perspective on how the market works. On even not even just how the market works. I'm not saying that I'm a professional or I'm an expert at that. I don't know better than anybody else. What I do know is that people spend a lot of time learning this, and a lot of it is just BS, right? It's straight
And
up.
yeah,
Like
and
I
it's
spent,
funny because yeah, go. It's funny because I worked in around portfolio managers my entire life. I was on the sales side of the institutional asset management business, and every time I try to bring up Bitcoin, they just laugh at me. Like, "Are you kidding? Like, we're a serious business here. Like, that's a scam. That's a Ponzi."
yeah,
How have you dealt with it? Because you are part of a very unique community. There's not a lot of CFA holders. It's super difficult to get and it's a major time commitment and you got to be really up there in terms of I want to get this thing, but I'm sure how does the CFA community look to you and you're like talking about Bitcoin trashing other investment because you got into a feud, didn't they come after you once?
yeah. I got reported. So somebody said that I'm too. I guess somebody said that I'm too bullish on Bitcoin. They sent a bunch of posts of mine to the CFA Institute, and the CFA Institute actually, they came after me. They not did not actually they didn't. I wouldn't say they came after me. They investigated me to
Mm,
see what I'm talking about, why I'm saying what I'm saying. They asked me a bunch of questions. I actually have a whole video on just explaining what happened. But they asked me why I'm saying these things, and they asked me to basically back up my claims
oh
in a way.
wow.
So
Okay.
I told them why do I have to do this when there are no other when no other CFAs have to do this. CFAs can just freely talk about the stock market, but I would guarantee that most of them have no idea what's really happening. They have no idea. They have no idea that the price is set at the margin, for example. Most
Mm,
professionals have no idea what that even means. So just that
mm.
alone, how can you make sure? How can you tell somebody who talks about Bitcoin, which is the best performing asset in the world, to back up their claims and to give them an education when you don't do that for everybody else?
Yeah, like choosing Microsoft stock. Why? And even there's no proof. It's not like it's a scientific process. All of it is speculation. I don't care how many financial models or assumptions, it's built on assumptions. And at the end of the day, how can you back up those assumptions if you go to first principle? No one can really back up. You're going to create a rationale around it. But that's fascinating, man. Good on you. And did they end up backing off? Hopefully.
Yeah, so it went to the head of the department, the head of research, or the head of whatever it's called, disputes or something. And
Mm,
they said to me, I mean, what they said was completely reasonable. So I'm not bashing them on this. I think it's just
hmm.
crazy that people reported me for telling them to buy the best performing asset in the world. But what the CFA Institute said was differentiate between facts and opinions, and I think that's perfectly reasonable because
Hmm.
at the end of the day, we might think that Bitcoin is going to $100 million, but and the theory may make sense, but it makes sense that we don't know what's going to happen in the future. We don't know when it's going to happen. We don't know how long it'll take. It very, very likely will happen, and at least in my opinion, but we don't know when it's going to happen. Let's say if Bitcoin, for all we know, Satoshi could drop all of his coins, their coins on the market, and Bitcoin's price drops to $5,000 for the next 3 years because people just lose hope. This is how
Mm.
markets work, right? We don't know what's going to happen. But what we do know is that there's a finite supply, and that's the only thing that's pretty much guaranteed. We're not gonna
Mm.
nobody's gonna accept a change to increase the supply to, let's say, 25 million, 50 million, 100 million.
Yeah, that's. I'm glad that was their final conclusion, and that's fair
Yes.
because even investment professionals across all asset classes, no one. It would be unethical to claim that you know where the market is headed. Like
Yes.
that's just not a thing. No one has a a view into the future. But I'm glad that got settled. Thank you for sharing that with us. I
Yeah,
know
absolutely.
sometimes these things, but it's good to show a lens that you can be diplomatic and reason prevailed at least in this type of situation. But
Yep.
okay, jumping on. So you have grown dramatically on X over the last 2 years. I think you're at 120,000 followers. So, which is huge within the Bitcoin space. You're a CFA chart holder, transition into Bitcoiner. What do you think resonates most with the people that follow you and engage with your content? I'm just curious.
I think the thing that people value is, I mean, what I try to do is with my content, I try to go into the first principles. I
Mm.
think people value that. So if you think about the root cause of things, and this is something that I learned from my wife. So before I started posting about Bitcoin, I was posting about personal finance. My wife doesn't have a finance background. So when I
Mm.
was creating content, I was asking her what she thinks, and she was telling me, I don't get it. I don't know what you're talking about here. So I started
Okay.
going deeper into I started going deeper into understanding what I was talking about, and over time, I think that's one of the good things. If you try to learn something from first principles, you start realizing that what you're talking about is, if you don't know, if you don't have any claims backing it up, you realize that what you were talking about is based on nothing. So, for
Mm.
example, when I was telling people, "Oh, buy the S&P 500," I just assumed that the S&P 500 will go up forever. The US economy will be the biggest one in the world forever. But then when you start going into first principles, you start thinking about different scenarios where maybe that's not the case. In 100 years, how do you know that the US government is going to be, or how do you know that the US economy is going to be the biggest in 100 years? In 50 years,
Mm.
even in 10 years? How do we know that? We don't. We don't even know if it'll be the biggest economy in a year. So, based on that, when I started diving deeper into that, and then of course I came across Bitcoin, I think at the perfect time, I started diving deeper and I started giving better explanations about the basics. I have a post I did really, really well explaining the Silicon Valley Bank
Mm.
collapse in 2023. And I think because I went into first principles, I think that's what people find value in. That's what helps them resonate with my content because they know that I've gone through it. I've done the research and I was where they were before. For
Mm.
somebody to be, I think a lot of finance professionals, they assume that they're better than everybody else, and they
Mm.
they know so much that if somebody else wants to have a conversation with them, then they have to study up on the basics. But what are the basics? So I think I kind of filled that gap. I don't think there are many. I haven't seen many other finance professionals who are talking about just the absolute basics, like the stuff that I was talking about before. People were just, I mean, I don't think they were giving they weren't giving the perspectives that the retail investor needs. I think
I
that's what
love
helped.
that. I think so. I love that for this particular reason because you spent thousands of hours in finance. Just the CFA alone, that's 1,000 hours. And I think a lot of people get caught up with, themselves. Like, I'm not gonna go below this threshold of difficulty or break it further down. I put in the work. Others should put in the work. I'm not gonna do that for them. But I love the fact that you benchmarked with your wife to kind of figure out where your content stands and you started building through that. Because I took a similar approach when I first started with Bitcoin. And my wife is a marketer. She has no background, no connection to finance. And when I used to post or talk, she's like, yeah, I don't think anyone's going to understand that, Ralph. I think, the way you explain things to me, that's how you should project yourself on social media, on your podcast. And we try to do that as best as we can without, alienating, people who are, a bit more sophisticated. So we try to go back. But I really appreciate that. That's really fascinating. And, a sort of personal question. Is your wife a Bitcoiner? Is she bought it?
I convinced her to start buying. I tell her to buy it. Now she buys on her own a little bit more.
Nice.
Um,
Okay.
but one thing that's interesting is that she's a healthcare professional. She's a nurse.
Mm.
So she tells me just about the people around her, and I've noticed I've actually been getting a lot of appointments. So I do paid one-on-one calls. I've been getting a
Okay.
lot of appointments with people who are healthcare professionals, a lot of doctors, a lot of physicians, a lot of psychologists. I actually have a meeting with a psychologist today.
Okay.
I get a lot of meetings with them, and that's because they focus on health. They focus on healthcare. They focus on the human body, anatomy, and all that, medications. I don't even think that they need to take finance as a what is it called? There's no prerequisites for them to take finance,
Mm.
so they don't even have the
Yes.
basics of knowledge.
Okay.
Like they don't.
Yes.
A lot of financial professionals don't know what an asset or a liability is. Or sorry, a lot of healthcare professionals don't know what an asset or liability. So I'm noticing when I get questions from them, they're very basic. They're very smart people. They grasp the concepts very quickly, but it's very basic. That's
Mm.
one of the things. So my wife, after she I don't know if it was my content. Maybe I kind of got her to look at other people's content. But
Mm.
after I started posting on Instagram about finance, she started investing her money. She used to go
Mm.
through a financial professional. She'd go through like an advisor or something, and they would just buy whatever she would just buy whatever they said. She'd be like, okay, go for it, do whatever you need to. And then after that, she started investing on her own. She started buying index funds, and now she buys Bitcoin.
Amazing. Well, good on you for that. How has the shift from, being a fixed income analyst, working with, CFA peers, PhDs in economics and all that, and then shifting to Bitcoin, has that had an impact in your circle? What do your previous peers think about what you're doing now? Do they think you're this crazy Bitcoin guy? I had to suffer a little bit of that, to be honest, but I'm just curious to see how was your experience?
To be honest, all my peers are Bitcoiners because
Oh,
I
wow,
I
amazing.
stopped working at TD before I discovered Bitcoin, or before I started studying Bitcoin really. So that's not really a problem. All my peers are Bitcoiners. I have a channel with other Bitcoiners as well, a couple other Bitcoiners. Um, yeah, I mean, to be honest, maybe I'm living in what's it called, an echo chamber. Yeah. Maybe I'm living in an echo chamber. Maybe I'm living in a bubble. Um, I think that a lot more people are going to come to Bitcoin, but I haven't really gotten much pushback from people. But when I think about it in my real life, a lot fewer people are Bitcoiners. So
Yes.
when you look at Bitcoiners in the career path versus Bitcoiners in real life, the numbers are much different.
Yeah. And I have noticed a shift too. I used to butt heads with friends and people telling them you need to, get into Bitcoin. I stopped because it's toxic and it affects, their views on you, your
Yeah,
relationships. But what I notice is you just plant a seed, you just give enough, and then you move past that conversation. And this cycle, I'm getting much more phone calls. People telling me, "Oh, I have this much on Coinbase. What do I do? I keep reading how it's a bad idea to keep it on Coinbase, and how do I do it?" And then you go through the process, like get a wallet but much more have come into the fold, and I'm noticing all of them. They're starting to understand that dabbling in other stuff because they have done that has not been fruitful at all. And then they're like, I'm just going to buy Bitcoin because it seems like long term, that's the right way to go. And its returns are really high. I don't need to make 17,000% overnight. If it grows by 40% compound every year, that's good enough for me and life changing. But that's a Western view, is what I've noticed. in the West, Bitcoin has been categorized more and more as a portfolio asset. In other parts of the world, it's more of a freedom, censorship, permissionless system. Uh, and both are valid categorizations, but do you see the ETF sovereign nations getting involved a risk in really turning Bitcoin similar to what gold is, which is just a portfolio asset?
No, I don't think that's I think Bitcoin will grow because of that. I think more people will
Mm,
see that. I mean, everything. I think everything is good for Bitcoin. No matter what happens, everything is good for Bitcoin. For all we know, if the world goes to a Bitcoin standard, maybe these ETFs will be a layer two on the Bitcoin
mm,
network, right? I don't know.
okay.
Maybe again, that's complete speculation. So don't start telling people that that's to your audience. Don't start telling people that's going to happen. I don't know. I don't know if that's going to happen. That's like I said, that's speculation. But I'm just saying, for all we know, that could be the future, right? Because
Yeah.
if we go to if we go to a Bitcoin standard, how else are you going to settle transactions? You're not going to be able to, you're not going to be able to get dollars anymore, or you may be able to
Mm,
get dollars. But why would you want dollars if the world reserve currency becomes Bitcoin at some point? Then why would you want dollars? I think at some
mm,
point the ETFs were going to they're going to allow in kind deposits and in kind withdrawals. I don't know when that'll happen. I think other countries are doing this, and because Bitcoin is the same asset all around the world, you let's say if you choose to buy an ETF or if you just buy Bitcoin directly, then if the ETFs are so much worse than just buying Bitcoin directly, then it's going to be, I think it's going to be a problem for the ETF providers because people aren't going to
mm,
want to buy the ETFs. They're going to just want to buy Bitcoin directly, especially if there are other ETF providers who are allowing you to withdraw in kind. I think that's going to,
mm.
that's the natural progression because what it does is it allows more people to deposit in kind. So when the
Yeah.
sellers for Bitcoin run out, the ETFs are going to have to provide some different kind of value proposition where you can deposit your Bitcoin in kind and you can withdraw in kind.
Mm,
Again, that's more
100%.
risky than just holding Bitcoin on your own because
Yes.
they can just take you're giving them your
But
Bitcoin.
that
But
does
what?
serve a purpose
Yes,
for certain individuals. So, pension plans will struggle to buy the underlying, and the
yes,
ETF is a vehicle that allows them to do though. But of course, if the ETF has the ability to do redemptions in kind, when they're comparing, they're going to want that option over the one that doesn't, because, just in
yes.
case they need to do it. Uh, about the ETF, so overall, my opinion is they've been a positive. Free marketing, great. You made Bitcoin mainstream, basically. My only concern, and a lot of folks seem to, you know, undervalue the risk associated with them. Because in the US, for example, I wanted to get your take on the concentration of Bitcoin under a single custodian, which is Coinbase Prime. 80 to 85% of all the ETF are being held by one custodian. What is your view on that? Is that an increasing risk because Coinbase isn't BNY Mellon, and if they lose the Bitcoin, no one's going to come and bail them out, similar to what happened with FTX. But what are your thoughts on that? Do you talk about that? Do you give people kind of those warnings? Because in the disclaimers of the IBIT, in the fine line, you will find that basically, as an ETF investor, you are an unsecured creditor. The assets can be used within the bankruptcy proceedings. And I have a feeling no one talks about that enough.
Yeah, that I didn't know about that. That's pretty crazy, but I had just assumed it. I mean, if you have your Bitcoin with an ETF, you have no control over it. You don't get to take care of it. If they lose it, if the custodian loses it, then you lose it. That's what I had just
Mhm.
assumed. I don't know if most people know that. I don't know if most
Yeah.
people understand that. I think most people even think that when they buy MicroStrategy, they have a claim on their Bitcoin, but they don't. So regardless of
Yeah.
what happens, if you're holding your Bitcoin with a custodian, if you're holding your Bitcoin with an ETF, if you're holding your Bitcoin with an exchange, you're you're not getting the actual benefits of Bitcoin
Mm.
because you don't
And,
have self sovereign money. You have to ask somebody else for permission to get your money back.
and do you think MicroStrategy and all these new companies that are, financializing Bitcoin, what's your view on them? Because I have my concerns because some people are now like, because of the ease of investing in equities compared to doing your own Bitcoin purchases and self-custody. They're just buying MicroStrategy because it's a leverage play on Bitcoin and it just keeps going up. But what do you tell people? I'm sure you've had that question, should I buy MicroStrategy? What would you say to someone that's telling you, should I buy Bitcoin or should I buy MicroStrategy?
So the way that I see it, MicroStrategy is an investment while Bitcoin is a savings account. So
Mm,
your savings account is going to give you certainty. Your investment is going to give you more returns to add to your savings account. But keep in mind that your investment account is risky. So your investment account could go to zero. Your savings account won't go, very, very, very likely won't go to zero. Of course, there are things that could happen that are beyond our control, but very likely it won't go to zero. So with MicroStrategy, let's say you own the stock, Michael Saylor could run away with your Bitcoin. We don't know
mm,
how it's kept. We don't know what if he's doing something in the background that's I don't think he is. I'm
mm.
not saying that he is,
No, I get it.
right?
Yeah.
But what if that's the case? So I think Bitcoin and cold storage is the best way to save. If you want to hold it, let's say with a custodian, you can do multi-sig, you can hold it with an exchange, you can diversify how you hold it. But I think Bitcoin, like actual Bitcoin is the best way. When you hold these proxies, you're not getting Bitcoin. You're getting exposure to
Mm,
Bitcoin. So with MicroStrategy, for example, I think that um it only invest what you're willing to lose.
mm.
Everything else
It's
should
a,
be saved. You should be saving everything else, right? You need so the three things that I think people should have are fiat, a little bit of fiat because they need to pay for their day-to-day expenses. They live in the real world. For some people that could be 3 months, that could be 6 months, that could be a year depending on how volatile your income is, how stable your job is, how long you've been working at the company for. Depending on that, you need to have a certain amount of fiat. Then the majority of the rest of it should be in Bitcoin, at least in my opinion. And then you can maybe, if you want to, you could put 5-10% into MicroStrategy. If you want to, you can put your pension account into MicroStrategy. That's what I personally did.
mm,
I put my pension account into MicroStrategy because I had the choice between buying either the ETFs
mm.
or MicroStrategy. So with
Yeah.
the way that I see it, I don't think Bitcoin is going to zero. So the way that I see it, because MicroStrategy is custodying their Bitcoin with Coinbase and so are the ETFs, the risk is the same in my opinion,
Yeah. You're
right?
getting more leverage though.
More leverage, right,
So,
right. It's possible that you could go to zero. It's possible that MicroStrategy could blow
yeah.
up, but I don't think that's going to happen just based on how they structured their debt. I think every 4 or 5 years, Bitcoin's price is going to go up. So in
Mm,
4 or 5 years, whenever their debt comes due, the Bitcoin they have will have gone up in value. So worst case, they can sell some of their Bitcoin. They can borrow some dollars against their Bitcoin. They can do whatever they want to. They're going to be much more lenders by that point, and they can pay off that debt, and they can just keep rolling it over forever. So
mm.
the way that I see it, have fiat, have Bitcoin, and a very small amount of Bitcoin, or sorry, very small amount of MicroStrategy.
Interesting. My only concern and problem with this whole MicroStrategy hype is that I feel it brings us back to fiat thinking because MicroStrategy before Bitcoin was like a software enterprise company. It seems that it's no longer that, even though that is still their primary business. That's what technically shareholders were buying, but now they're buying the Bitcoin play. So it seems like, how when you print money, there's misallocation of capital. It goes to places where it shouldn't go. And, MicroStrategy is really not adding value to its business in terms of like that hasn't changed. They're just a software company. They weren't that huge. And so much value is being dumped into MicroStrategy for the leverage Bitcoin play. I mean, does that concern you? It seems like we've done full circle from all Bitcoin, hold private your own keys, self-sovereign, and now it's like people are just dumping into a financially leveraged instrument, and no one cares what they're doing at the business level. Like,
I
even the
think
earning calls are about pretty much how much Bitcoin per
Bitcoin.
share they have. Like,
I think I think one thing that MicroStrategy is doing is they're using Bitcoin as the hurdle rate. So they're using
yes.
Bitcoin as the rate that they want to exceed in returns, and maybe they don't have a business plan that can do that. I don't know if most businesses can do that. How many businesses can exceed at 50% a year, especially at that scale? Maybe our businesses can do that. Let's say, for example, if I'm spending my time making, YouTube videos, if I'm spending my time
Mm,
helping people, maybe that business can increase, but I could easily just sell everything that I have. I could sell all my equipment, buy Bitcoin with it. To me, it wouldn't be worth it because
mm,
the amount of money that I get from my equipment to buy Bitcoin is going to be very, very small compared to what I can produce over time. So
mm.
at their level, they already have this, they're already at this point where they can use the equity markets and they can use the bond markets to generate cash to raise capital and buy Bitcoin. So to them, the way that I see it, actually, this is for everyone, but to them more because they're a company. So the way that I see it, Bitcoin is optionality. You can do whatever you want with Bitcoin. I think what
Mm.
MicroStrategy is doing right now is they're raising capital. Before they used to be a software business, I think in the future they could be a massive part of the financial industry. And they
Yeah,
can, right now they're basically in that capital building phase. It's like if JP Morgan or Bank of America were in the early phases when they didn't have any shareholders. It was a a private bank. The people who started it are the ones who are funding it. But in this case, MicroStrategy is it's making that, it's making it possible for more people to be able to fund MicroStrategy. And I think in the
yeah.
future it could be like a massive bank, it could be a massive financial institution. For all we know, it could be a insurance company on the Bitcoin standard. It could be like I said, a bank. It could hold people's Bitcoin. It could borrow fiat against its Bitcoin if fiat survives. It could borrow fiat against its Bitcoin and then it can lend it to people. Right? There are
Hmm.
so many ways that they can use that Bitcoin. I don't think that we should focus on what they used to do. I think we should focus
Hmm.
on what they can do because that's what Bitcoin does. Bitcoin completely changes the trajectory of the world. We're if we focus on if we focus on what they can do, I think that's fiat thinking because
Hmm.
what they can do can change. I think Bitcoiners are open to seeing the future a different way from the majority of people, and I think that's very important. I don't think that it's a problem that they're allowing that they're using the capital markets to buy Bitcoin. I don't think that's a problem. They're doing what they can, right? Anybody can buy
Mm.
Bitcoin. Nobody can stop anybody else from buying Bitcoin. So if to them that's the best solution, I think it's best to accumulate your own Bitcoin instead of worrying about what they're doing.
And they're basically building a war chest by taking weak money and then transferring it into sound,
Exactly.
hard money. So they're getting ready, like you said, for the future. That's a really good
Right.
point. I like that. And you mentioned the hurdle rate. So I don't know if you've heard of early riders. Does that ring a bell?
No.
So, because venture capital is transformed, right? So venture capital has been problematic. We've seen huge raises happen during a variety of, crypto cycles, and then no value is created. So there's actual capital destruction. And the typical approach of venture capital is to just deploy as quickly as possible. So Early Riders is actually a Bitcoin denominated venture fund. So they raise in Bitcoin, they deploy in Bitcoin into Bitcoin treasuries for startups and founders, and then they return back to LPs in Bitcoin. So what they've done is they've shifted the time preference. So they don't mind not deploying because their Bitcoin, their treasury is being held in Bitcoin.
In
Because
Bitcoin.
if Bitcoin keeps doing what it does, they can keep extending their runway longer than the typical venture fund. They need to spend it now because it's depreciating, and they use Bitcoin as their hurdle rates for the companies they invest in. So they invest only in companies that they believe can basically outperform Bitcoin's compound annual growth rate. So I think we're going to see more of that into the future, and this kind of forces leanness, right? So teams will be leaner with AI coming in. You don't need as many people. You don't need to hire a person for every single role, and it allows you to preserve capital. And I think that is the thesis behind kind of Austrian economics, like the preservation of capital, right? Those who save should be the ones in power. Nowadays, those who save money, currency, let's just say, are the ones losing power over time, right? Because
Yep.
it depreciates. But that was a really good point on the Microsoft. I thought I'd share that. Just do you think we'll see more of that into the future?
Oh
Companies that are
yeah.
more. Mm,
100%. Why would people want to okay, so let's say you have a choice between buying rental property versus buying Bitcoin. You can we mentioned all those issues with real estate. You have to pay for maintenance, you have to pay for repairs, lawyer fees, realtors, you have to collect rent. If you had the choice between doing that and getting a 20% return versus buying this asset that's had a 50% return over the last 10 years, what would you choose? It's a no-brainer.
And do nothing.
And do nothing.
Like
Like
don't
you don't have to do
have
anything. There's nothing that you have to do. I know it's not
yeah.
guaranteed to go up forever,
No.
but I mean it makes sense to put a small part of your portfolio into it, right?
Yeah.
And if that's going to continuously be the return over time, then why wouldn't you use that as your hurdle rate? Well, why wouldn't you just hold on to if something's not performing better than Bitcoin, why would you want to buy it? Unless there's some kind of utility to it. Let's say if you want to go on vacation, your vacation is not going to perform, it's going to zero. You're going to go on
Mhm.
vacation, but the reason why you're going on vacation is to enjoy your life. But if you're saving money, why would you choose to intentionally save in dollars or in a stock when that stock or those dollars are underperforming against Bitcoin? It doesn't make any sense.
Mhm. And what are your views on gold
I
as
think
a mini allocation, let's just say?
I think it's fine having a small allocation to gold, but gold is going to trend to zero against Bitcoin as well. You have to remember that. So before you could buy 1 ounce of gold for like 10,000 Bitcoin or something like that at some point. Today you
Mm.
can buy what is it? Today it's the opposite. Today it's like 0.03 Bitcoin per ounce of gold.
Yeah, I think something along those lines.
Yeah,
Yeah, because I bump into people, the ones that are like, yeah, screw real estate. I get it. I understand your points. The next follow up would be, yeah, but gold is better.
so
So
I,
what do
I
you
think that
say to
gold is
someone?
purely speculative. I think gold is
It
pure.
is.
People are just speculating that its value will go up, and it's gone up over time. That's happened for the last few years, last few decades, last few centuries, last few thousand years. It's going to continue to happen. In terms of dollars, it will because more dollars will always chase gold. But then actually, that's not guaranteed. A lot of people are just
Mm,
holding gold because they think of it as a savings tool. So if those people start selling their gold into the market, how do we know that the price isn't going to go down? If enough people start dumping their gold, the price of gold is going to go down in terms of dollars.
100%. And gold also has some of the same issues with real estate. Moving
Yep.
it, large quantities of it is extremely difficult. Storing it is a nightmare. It's basically like you have a building, that's your gold stack, and moving it is
Yeah.
difficult. You're going to get killed on the spreads when you want to sell it, especially in a crisis type of event. You're
Yeah.
not going to get it at the price you want. You're going to lose on the sell. Like that's
Yep.
people think that, oh, that's the price I bought it. It's gone up. I'm going to sell it at that price. Well, in a crisis environment, no one is going to sell it at the price. Everyone's going to want to rip you off, basically. We're almost at the mark, Rajat. I've loved this, but I wanted to get, what do you do outside of talking about Bitcoin for fun or for your personal, like what fills your cup?
I wanted
Because,
to mention just one last thing about your gold
yeah,
point there. So the issue
yeah.
with gold is that you're selling it locally. So you're selling it to the
Mhm.
people around you. With Bitcoin, you have the entire market, entire world buying Bitcoin from you. So the spreads are much, much thinner because of that. Over time,
100%.
I think the spreads for gold are going to increase because if actually, let's go back to the question: how do we even go to a Bitcoin a gold standard? It's not possible. People think
No
that
way.
people hold gold because they think eventually we're going to go to a gold standard, but that's not possible. How are you going to pay for coffee with gold? You can't. You have to have some kind of custodian holding that gold for you. Right. Okay.
Mhm.
So let's go to the last question. I really like playing hockey. I like playing hockey. I play hockey 2, 3 times a week.
Wow.
Ball hockey. I like
Okay.
I like lifting weights. I like going to the gym. I love watching shows, watching movies. I feel like more before I used to just watch shows and movies to waste time, kind of.
Mm.
Now I have actually become I've become more appreciative of how movies are created, the ideas behind them, how shows are created. I feel like the ideas are amazing. It's basically just somebody telling you what their thoughts are of what could happen in this situation. It's a story, right? And I've been appreciating it more over time. I I spend a lot of time with my wife. We go to the gym together. Like we like trying different kinds of food. I think that's key. A
Nice.
couple days ago, we tried Iraqi shawarma for the first time.
Oh,
It
really?
was so good,
Nice. Okay.
so good.
So
It's
was
just
it,
there in in Toronto. There are so many different restaurants. There's so much
yeah.
diversity that there are all kinds of restaurants, and the people who make the food in those restaurants, they have skills that they gained from back home, and they bring them here.
Mm,
And it's just there's really great Thai food,
yeah.
right? I think
Yeah.
that's one of the things that I love doing. I love trying different kinds of food.
It sounds like you're ramping up your food critique. Soon you're going to be putting out content on food
Absolutely.
and movies.
Yes.
I love that.
Yes.
Yeah. And final question. If you were to recommend one book for someone to get into Bitcoin, which one would it be?
I would say it's well for me it was the Bitcoin Standard.
Of
I,
course,
the
most
Bitcoin
people.
Standard was probably the best one in at least for me. It was the first one that I read. It was the first one that I came across. I think that's what the majority of people are going to come across first. Um, I think the price. What is it called? The Price of Tomorrow by Jeff
Yes,
Booth.
by Jeff Booth.
I think that
Amazing
one's
book.
really good. I think that one's
Yeah.
something that people should read. Uh, Even if you don't want to read the book, listen to his podcast, listen to his conversations that he has with people. It makes a lot of sense when you think of it from his perspective. The US dollar is just a lens.
Mm,
The Bitcoin is just a lens. So Bitcoiners, so at the same time, there are people whose cost of living is increasing, but then there are other people whose cost of living is decreasing. At the exact same time, they could be consuming the same things. Bitcoin is just a lens. I think that's what that book
mhm.
shows you. It shows you it shows you why the cost of living should be decreasing. We're getting better at producing things over time, so the cost of living should be decreasing. Why is the cost of living increasing when things are becoming
Mm,
more abundant?
yeah. With
Once,
better technology, better,
yes,
techniques, it just makes no sense. Like every year you end up paying more for your
right.
laptop. It's like, how?
Yeah, and over because we're getting better at making these things, they become more abundant, but at the same time the cost is increasing. It doesn't make any sense. We have years, decades, thousands of years of skills that we built on top of. Why are
Hmm.
those skills not becoming why are those skills not helping everybody become prosperous? It's because of fake money. It's because money is being printed. No matter how much you save, no matter how hard you work, your savings will be devalued by somebody else who can get money printed out of nothing.
Yeah. Have you read The Creature from Jekyll Island?
I haven't, but I know about the concept behind it.
It's brutal. I mean, I would never recommend it to someone as a first read. It's like 700 pages and it's depressing.
Yeah,
But
I'm not
it's really
surprised.
amazing. You should check it out if you haven't.
Yeah.
It's one of my favorite books if you can get through it. But Rajat, where can people find you? Where can people consume your content? I know where, but please tell everyone else
Yeah.
because highly recommended. Where can you have a website? We'll share everything in the details, but this is your chance 20 seconds, 30 seconds, plug in.
Yeah, absolutely. So you can find me on YouTube. You can find me on Twitter. If you just search for Rajat Soni on Twitter, I'm the only one that's verified. There are a lot of fake accounts. Don't follow them. Follow the real one. I think it's like you said before, about 120,000 subscribers or so. I'm on YouTube as well. My YouTube is growing very quick. So right now I'm at about 27,000 subscribers. Who knows by the time you see this, maybe it'll be at 30,000, 40,000. But search for my name again. You'll find me at the very top.
Amazing. Thank you so much for your time, Rajat. I really enjoyed our conversation today.
Same here. Thank you so much for having me, Ralph. Appreciate it.